What's up guys, Girolamo, Aloe here, founder of Finance Analytics, and today I want to talk about three important ways to track the volume in the chart. We know that the volume is something particularly difficult, but we know also that the volume is particularly useful in many circumstances to understand the correlation between effort and result in the market. So how the price moves, what moves the price and why this is moving. So we have to understand also in which way we can interpret the exchanges of securities in the market. So we need to have clear the effect that the volume has in the price behavior. Then we need to have clear how to use the volume in the right way. So we have three important things. The first one is track the volume per time. And this means track the volume per time slot. The normal chart that you use every day, made by candlestick, bars and lines, is a vertical chart. The price is just tracked by a time interval, a time slot. Just the time frame defines the time slot. We know this. In this time interval, we have that the price moves, but also the exchanges increases, and this marks a volume bar. So the most common way to track the volume is to use the time slot, accumulating the volume in a time interval, in a time slot. And then we have a first time slot, a second time slot, another time slot that gives a volume bar with a total volume, another volume bar with a total volume, and another volume bar with a total volume. This is the tracking of the volume per time interval, per time slot. The other way to track the volume is to track the volume per price. This means track the volume per price level. So I have the price that moves, and the movement of the price is related to the exchanges of securities that we have in the market. This means that at the specific price, any price, there is always an amount of securities that is exchanged. So if you accumulate these securities that are exchanged for the price level, you get an indication. This indication is particularly important. This means simply that if you have a price, the price can move down from the top or move up from the bottom, going to converge to this price. Every convergence from the top or from the bottom to that price level shows an amount of securities that is exchanged. So if you accumulate all the securities exchanged every time that the price converges to that price level, you get a profile from that price level. This information is particularly useful. You collect all this data price by price, and you see that the volume marks a profile into the chart. We see that this profile shows a price level when the amount of volume exchanged is very high, and then other price levels where the amount of volume, accumulated volume, is very low. Then we get high volume nodes when the volume is very high, and low volume nodes when the volume is very low. The most important thing is not how big is the volume around a price level, but it is instead the price interval where the volume, the exchanges of securities, increase and decrease before to reach the price level where the volume is the highest. This volume is a high volume node. It has a top edge and a bottom edge, and these are particularly important. The most important thing that I can use for my trading is not the highest volume I have in a specific price level, but it is the top edge and the bottom edge of the high volume node, because there are my resistance and my support where the price is going to get an opposition, beginning to get an opposition, because when the price approaches to the high volume node, this is something where the price behavior gets a slowdown. This means that around this volume node where there are always an increasing of exchanges, this increasing of exchanges work just to give an opposition to the price behavior. So this is important. High volume node and low volume node are very useful for trading. These define where you have your resistance and support in reality. The real resistance and the real support where the price begins to get an increasing of the exchanges and then increasing in opposition. Indeed, the price moves very fast where the volume per price is very low, but the price slows down its behavior when the tracking for price level of the volume is very high. This is particularly relevant because you know where the price is going to get a slowdown, because you know where is the real resistance and the real support in the chart. That is not a trend line that you draw on a pivot. It is a trend line that you can consider measuring the volume per price level, and this is concretely relevant. And you understand another detail. I have a trading area And this trading area shows that in the middle of the trading area I get a price level that is just the preliminary demand support or the preliminary supply resistance. This price level here that has the biggest amount of cumulated volume during the development of the trading area, because the price moves up and down around the middle point, the middle price. The middle price shows the highest volume, but this is useless in the most cases for my trading, because I need to understand the volume behavior on the top edge and on the bottom edge. So the volume shows here a big curve, and my most important point are just there's a high volume node on the top and this high volume node on the bottom, because they define where the price gets a real opposition on the top edge, on the bottom edge. This is a volume area where I have a volume area high just on the top and the volume area low just on the bottom. This is the way to track the volume per price level, and this is absolutely useful because this marks a profile in the market behavior. The last thing that I want to talk about tracking the volume is track the volume per trend. So this means that you're tracking the volume per buying wave or selling wave. The buying wave is a segment of a markup, and the selling wave is another segment, bearish curve, bearish curve. So tracking the volume per trend, this means that I measure the volume point by point for this trend, and then I accumulate this volume for the entire duration of the trend. So if the price is moving up, this is sustained by the demand. Then the counting of the volume shows how much demand, how much exchanges are accumulated from the bottom to the top. So I can count the volume and say that this shows that the price reached the top of the buying wave with a very high amount of demand. And this means that the demand is so high that it's going to get an opposition. The opposition is relevant, the supply pressure is enough to stop this advancing of the price, and the price can decline. The same way, the total amount of volume that increased step by step in the selling wave became so high, so big, that later an opposition is beginning. This opposition is stopping the price behavior, and this is the way you measure the volume per trend. Measure the volume per trend is very useful. This is the practice used in the waist wave and of course in the money flow. In my chart, I use all of these tools, all of these ways to track the volume, because I understand where the price is going to get a stop. This is particularly useful for my trading, not just to have every detail from the volume per price, but just to have my boundaries, understand them very well, knowing that the price is going to have a slowdown in those points. Instead, the volume per trend is for me relevant because every kind of tool I use for the volume per trend shows to me the persistent supply pressure and the persistent support and demand, counting the buying pressure and the selling pressure in relation to the price and volume. And this relation shows to me something that is particularly useful. When the buying pressure emerges, this is interesting for me to consider by trade. Instead, if the price advances but the buying pressure is not emerged, I have zero interest to buy that financial instrument because the conditions are not good, are not favorable for me. In the same way, for the volume per time interval, I consider time interval per time interval, the volume spike and the progressive increase in volume. These are very useful for me. These are particularly important. So guys, please like and subscribe to my channel, and of course, if you have questions, please contact me. Join on ProfMe. Bye bye.